Hey, good afternoon. My name is Julia Coakley, Head of Operations at the MGAA, and I'd like to welcome you today to a webinar which is being delivered by Implement Compliance Solution Resources, or ICSR. Before I introduce our presenter, I'd like to run through a few housekeeping points, if I may. Please ensure your microphone and your camera is off, and if you'd like to ask a question, please use the chat button at the bottom of your screen. If we don't have a chance to answer your question during the Q&A session, this will be answered by our host post-webinar. This presentation is accredited for CPD points if relevant to your ongoing professional development, and the video will be available on our website and MGAA YouTube channel post-event. We will be issuing a feedback survey, so please do complete this, as it does allow us to put on the best quality events for our membership. So today's webinar, the FCA Business Plan and Strategy 2022, a change in regulatory style, is being delivered by Kenneth Underhill, Director of ICSR. Kenneth has almost 30 years in the London insurance market and is the former General Counsel of Chubb European Group, then ACE. A director of multiple insurance companies operating over 30 countries with a turnover in the range of $5+ billion. Responsible for legal compliance and corporate governance across the EMEA region. And prior to that, Kenneth was a founding partner of the commercial and regulatory team at Reynolds Porter Chamberlain. Kenneth founded ICSR in 2017. So Kenneth, if I might hand over to you.
Thank you very much, Julia. Right, I seem to set myself quite a task today. We have possibly less slides than ever, but what is very telling about this is that we have as many slides relating to the strategy plan that the FCA issued as we do for the 2022-23 plan. I think what the FCA is saying, or Nickel is saying, is that this is a journey. This year, this plan for this year is just part of a much bigger picture about the way that he wants to change the way the FCA works and the approach that they're taking. So there's a lot that we're going to cover here. Just to reiterate, Nickel's third year. In the first 2 years, it was almost all about Brexit and COVID. So this is really his first opportunity. He hit the floor running. This is now his first opportunity to give, his views on how the FCA should operate. And what he's done is he's really gone and looked forward. So he said, okay, so we've got COVID, we've had Brexit, there are still issues coming from those, but now he's looking at some of the bigger issues, some of the other issues rather. And the key ones are environmental issues and technology and the digital age. And as we will see as we go through this, what the FCA is saying in relation to the latter is they're going to prepare the FCA for how it deals with new technology and the digital age, but they're also going to significantly use it. And that is a key theme throughout both the strategy and the plan. As we go through, I want you to think about these as key words. And I normally do a sort of exercise on highlighting the number of times keywords have been used, but I haven't done that this time. But the ones that I've seen a lot of as you read through the plan and the strategy are forward-looking, proactive, assertive, speed of action, and technology and innovation. So as we go through this, just think about those. They're not themes. We will talk about what the themes are, but they are words that appear very commonly. I don't see, there we go. Okay, so let's move forward. The first thing I have to do is to talk about the learning objectives. And the learning objectives for today are to describe the change. Hopefully, you will learn about describing the change in approach to regulatory compliance being adopted by the FCA and the strategic objectives driving this change. We hope that you will also learn about the specific areas of focus the FCA will be looking at in 2022-23 and how firms should approach these. We also hope that we will have appropriately explained the likely impact for firms on the tougher approach to non-compliance being signalled by the FCA and the likely impact of the strategic change of the FCA work, such as that on the new consumer duty and appointed representatives. I'm now going to ask Julia to put up a poll. We want to start this exercise with a poll to see what you're all thinking at the moment. So, Julia, could you please? And if you could all answer this in the time that you have available, we'll probably give you about a minute. So if you could answer this, it might be quite helpful to see where we are at the beginning of this exercise. Okay, we're just going to give it another 10 or 15 seconds. We've got about 80% of participants have answered, so a few more. Okay. Julie, would you like to stop that and let's get the answers up on the screen for everybody? All right, well, that's interesting. I think that's, it's obviously representative. 71% of you think that there's going to be change, but you're not quite sure what that's going to look like. And interestingly, I don't actually think either the strategic plan or the annual plan give us significant detail. It's quite high level. So I'm going to try and interpret some of this for you today. But I think some of it is going to be, we're just going to have to wait and see what some of it looks like. All right, so what we've got this year, the 3-year strategy, I'm going to start with the 3-year strategy, is that they're moving, Nigel Rathie has described this as more innovative, more assertive, more adaptive. So immediately you can see there are some of the words that we were talking about a moment ago. The strategy paper talks about 3 areas of focus: reducing and preventing serious harm. And this is about financial crime, but it's also about firm failure, both financial and operational. It's also about setting and testing higher standards. And this part is all about the products and the services. It's all about the customer journey. And it's about higher standards on entry and higher standards once you're actually authorized. So we're going to see some of the interplay between those. And the third focus is about promoting competition and positive change. Now, on this one, I am going to raise a question because I think that there's an issue there around proportionality. There's an issue there about whether or not higher standards can also promote better competition. So we'll come back to that. The key piece of the strategy and the key piece of the plan as we get to it is about desired outcomes. And for consumers, those 4 key desired outcomes are fair value and suitability and treatment. Now, both of those, the themes there are about making sure that consumers have the right information in order to make decisions, they are sold the right products, and they receive the right service. On the wholesale market, which is where MGAs play quite a lot, it's about the discussion there is around customers being able to make well-informed decisions on value, which is based on better transparency. So there are slight subtleties between the consumer business and the commercial business. And you have to understand where you play those out in areas like SME and micro businesses. For consumers, again, we talk about confidence as being a desired outcome, and confidence is about the participation in markets where there is minimized harms and minimized financial crime. And finally, access for consumers. And this is about making sure that at all times there is high operational resilience. So when they need to change a policy, when they need to renew, or when they need to buy a policy, that they can access the market, and low exclusion. Interestingly, on the low exclusion side, we're going to talk about this a little bit later, but it's all about, a large part of that is about vulnerable customers. And as we will see later on, vulnerable customers to the FCA does not just mean people with disabilities, and we'll come back to that. So those are the key things for the strategic plan, and of course they play out into the annual plan. I'm going to look at each of these from the point of view of the key areas of focus. So Ben, if we could now turn to the next slide. And this is all about reducing and preventing serious harm. And these are the areas that the FCA is going to look at. And I've talked briefly about reducing harm from firm failure. I don't go into that in detail here, but one of the things that we have seen in the last year, and we know is going to continue, is a real focus on client assets in the broking and MGA space. So that's about whether or not you have client monies, and whether or not you need to have client monies permissions. We've seen, for example, that as firms are putting in their annual audits, the FCA is challenging whether or not they do still require client money authorization. So for MGAs, most binders have risk transfer. There's a question there about really, how or if you have client monies, and brokers. That's still very much true where you do have client monies. The other side of that reducing harm, as I talked earlier, is about financial stress. We've seen certainly since COVID, there has been work by the FCA around capital and the financial viability of brokers and MGAs. And we're also talking about operational stress. And we'll come back to that again. In fact, when we look at one of the other focuses. I will talk quickly about dealing with problem firms. There's great discussion in the strategy plan about the new staff, and they have already this year hired 200 new staff, and there is an expectation of another 80 coming in shortly. Those staff are being organised into groups. They are changing the focus of the supervisory teams. They are empowering them in a way that we haven't seen before. So individual supervisors and individuals who are dealing with authorization applications are going to be empowered. There's a governance shift here. Decisions on whether or not a firm is complying or whether or not a firm should be authorized are not necessarily going to end up at committees anymore. And that may cause a bit of inconsistency in approach to start with, but I don't expect that to last too long. But what I do expect is that we are going to see, because the FCA wants to see more assertion. And the way to have that happen is to have empowerment at a level where decisions can be made more quickly. So we're going to see that, and the way that the FCA is going to deal with problem firms is by using the threshold conditions a great deal more. And we're going to cover that again later on, but we'll also see how they are using data to help them make their decisions. Improving oversight on appointed representatives is another area within this. And we know, well, I hope you all know about the work that's been going on this year on appointed representatives. That is going to carry through with a policy statement in July 2022, so not long now. What the FCA is looking at is they want better due diligence by principals, and that's not just about due diligence on products, that's due diligence on whether or not the ARs are financially secure or not, and they want better oversight and control on them. We know that there is a policy statement coming out. We know that that's going to deal with that question of due diligence and oversight and control. We also know that they are looking at changing the legislation. This is an area where they want they want to focus on the perimeter, and they want to tighten that perimeter up. What we don't know at this stage is what changes that will bring. But it is an area where this focus is happening now because of the level of complaints. And I'll come back to that. That's a data set that the FCA has. It's a data set that it is used to look at an area of concern for them. And so if we could move on to the next slide now, we'll come back to that sort of philosophy behind all of that. So setting and testing higher standards, excuse me a moment. There's probably no better example of that at the moment than the introduction of the new consumer duty, which is on its way. They've done the consultation. We know that we have to meet the requirements. And this is again going back to that question of services to customers. This is all about making sure that customers can make informed decisions. And I say customers because you still have some of those commercial customers that may fit within that definition of consumer. We also know that alongside this, they are reviewing the financial promotions regime. Again, it's about making sure that customers make informed decisions. The issue here is that the focus is going to be on the outcomes that we talked about earlier. How are you making sure that the customers have the right information, are sold the right products, and get the right service? And it's that consumer journey that the FCA talks about. The cultural shift here is in the way that the FCA is going to review these outcomes. And this is extremely important because we'll see later on that it's no longer going to be that they are going to look at individual firms per se. And I think some of that's already happened. I talked about it earlier on in terms of the appointed representatives. They're now looking at products. They're now looking at areas of firms or groups of firms. And it's all data-based. So some of it will be individual firms, and some of it, and in fact, I think a lot more of it, is going to be about the data that they are receiving to determine whether or not consumers are getting the right outcomes, those 4 outcomes that they want. We're also going to see a focus on minimising the impact of operational disruptions. They have told us that important business services is going to become an element of an application for authorisation. So guess what? It's pretty clear that if they're raising the standards on getting in, they're also going to raise the standards that they expect of firms that are already authorised. And we know that the FCA is working with the Bank of England and the PRA. Sorry, I'm going to turn my phone off, that's annoying me, to come up with some more working papers on that. Finally, a strategy for positive change on ESG priorities. The FCA has set itself some metrics for quality and quantity of climate and sustainable disclosures, and they will be measuring firms against that. So you can expect to have to be disclosing metrics on climate and sustainability going forward. We also know going forward that diversity and inclusion is a key issue for them. Again, it's going to be something that's a part of applications for authorisation going forward. And again, it's something that firms have already been told they need to improve on. And I have to say, I mean, from work that we've been doing recently, diversity and inclusion in firms is still a long way behind where it needs to be. We're seeing firms that don't have succession plans, firms that do have succession plans, but have no indication of any diversity and inclusion goals in them. And these things really need to be tightened up. They need to be improved because the FCA is going to be looking at this across the board. All right, next slide, please. Right, this is the one that I have probably the most doubt about. We know, or many of you probably know, that there was a letter from Lord Hollick, the House of Lords, on the Treasury side, where they called for more proportionate regulation of commercial insurance. And the issue I've got with this is that the FCA is saying we are going to set the standards higher, and that seems to me to be diametrically opposed to the ability to increase competition, because a lot of competition comes from new entrants. And if you're setting the standards higher, you're reducing the level of entry or the number of entries. So higher standards is obviously good for the market because it means it's a safer market. So it's safer for consumers. But increasing the standards and increasing the difficulty with which it is to get into the market means that there are higher costs of compliance. There is generally less innovation, and there will be less market entrance. And that itself, therefore, acts as a brake to competition. So I have questions around whether this how this will operate and whether or not they will be able to achieve this. On digital markets, very important. As I said earlier at the beginning of this, the FCA is talking about digitalization and the impact of that on the market. But it's also intending to use that. So on the digital side, they're expecting the big digital economy giants to come into the insurance market. We're already hearing and seeing some of that. They are preparing for that. They are, well, one of the things that they've done is that they now have a specialist digital team. That digital team is there to oversee the market and its transformation digitally. It's there to be supervising digital players. But more important, or not more importantly, but just as importantly, those guys are also there to assist the FCA on its own use of technology and data. So we will see more focus on this area. We will see a change in the way that the FCA looks at digital distribution. So firms who are, be it MGA broker, be it money supermarket, those guys, there is a team who are going to be looking at how you distribute products digitally, and there will be that question again around, are consumers getting fair value? Are consumers getting access? How do you deal with vulnerable customers who don't have access to the internet? So all of these things are going to be looked at. Right, okay, we are finally moving on to the plan. Thank you. So you can see the plan starts with the three key focus areas: reducing and preventing serious harm, setting and testing higher standards, and promoting competition. And they're framing their activities. They've got these areas that they are looking at. And if we look at authorization of firms and individuals, we know already that they're bringing in more people. We know that they have given those individuals more authority. And we know that they're increasing the requirements around D&I, around ESG, and around resilience and technology. So there's a lot more there. There's an increase in the standards that are required to get in, and those increases are going to be carried through to firms that are authorized. We know that they are going to set rules and standards. Now, interestingly, as we will see very shortly, those rules and standards, I don't think they're going to change considerably, but we'll look at that. Supporting in competition, I've already talked about that. On the empowering consumers and firms, it's about transparency, recognizing and reducing harm. They're looking at those poorly behaved firms. They're looking at financial crime. how can they protect consumers and customers better. And then they talk about taking quick and effective action. That's that proactivity coming in again. And here, a lot of what they talk about when they talk about taking quick and effective action is about the new people they've brought in. It's about the new approach that they have adopted, where they are giving supervisors more power and more authority. And importantly, it's about that technology, and it's about their use of technology. So let's have a look at these according to the areas of focus. If we could move to this first one, thank you. Right, so what the FCA has historically done is it's focused on financial threshold conditions. So do you have the capital? Do you have the ability to trade through difficult periods? We're seeing that shift, and they are going to, as I say here, expand the types of threshold conditions they take action against. So they're now starting to look a lot closer at non-financial threshold conditions. Is your IT up to scratch? Do you have enough people? And this is a really good. If we look at this is almost a sort of a small area that you can really use to get an idea of what the FCA is talking about. So if we look at an example, if they identify that a firm has poor response to claims, it's not dealing with claims quickly enough or complaints quickly enough, they're going to start to question whether or not that firm has the IT which is needed to deal with those claims, or does it have the people? Has it got enough people? And if consistently those metrics show that you aren't dealing with claims quickly enough, or complaints quickly enough, or complaints aren't being dealt with appropriately because the FOS is saying too many complaints are being overturned by them, then guess what? They're going to be questioning whether or not you're meeting those threshold conditions. Okay. Another example that I can give you, and this is an absolutely valid example of something that's happened in the past. Firm failed to file its returns on time. It also failed twice or three times, I think, possibly, to file a correct return. So it filed one, it was wrong. It was obvious that it was wrong. They had to file another one. When they updated that, there were questions about that one, and again, it turned out to be incorrect. That led to a 166 for that firm. And the result of that was that the controls were insufficient. The threshold conditions were not being followed. There weren't enough people, there weren't enough resources, and the IT wasn't good enough. And the consequence of that was a fine in excess of £10 million overall. So it gives you an idea, if you think about, how this can operate. If they have if they have the data available to them, which can show that something is going wrong, then they are going to use that. And the people at the front line of the FCA are going to have the ability to take the action that's necessary. So complaints, for example, is probably the best example, because here they're going to have the returns that consumers are providing. They're also going to have information coming in from the FOS. And what they're telling us now is that they're going to be using, web scraping. They're going to be using the IoT, and they'll be getting information from FOS, and they'll be collating all of that information together. And they have much better, as we'll see shortly, much better ability at analysing that and coming to a conclusion about whether or not action needs to be taken. Appointed representatives, they've already done some of that, right? So we know that there's activity taking place now. We've had the consultation. We've had, or we're about to have, the policy statement. And why? This was driven partly around the need to tighten up the regulatory perimeter, but primarily because the highest level of complaints related to business that had been handled by appointed representatives. So that Those are two really good examples of how the FCA is going to take is going to adjust its approach. It's stuff that I'm using examples from the past, but what they're telling us is that these are really good examples of how they're going to operate across the board in the future. Operational resilience, we know that there's more work to come there. We know that they're going to be focusing on this. There's more work to be done with the Bank of England. There's more with the PRA that's going to come out. And financial crime and sanctions, they're already doing a lot in this space. And I'm going to talk about that, I'll talk about it now, I think. So they have a new team in financial crime who are focusing on fraud and sanctions. And there is a specific team now in the FCA which is in the insurance sector. So it's just for the insurance sector, who are focusing on fraud and sanctions. At the moment, the FCA has told us that that team is absolutely focused on whether or not firms are doing what they should be in relation to the new sanctions against Russia. So they are looking closely. They're starting to do the sort of things that they've been talking about in the plan. In fact, they started it before the plan came out. So that's the way that they're starting to adapt their new approach. Those are examples. If we can move on to the areas of focus. So firms seeking authorization, another part of the change that they're taking, that they're doing this year. They have said that there are more resources coming. That's the 80 people. Those people are going to be looking at applications, and they are going to be given the authorization to pretty much decide whether or not an application should be permitted or not. Whereas previously those applications were going up to committees and boards. More of the decision making will take place at the individual level. It may be at manager level within individuals, but some of that will be there. And there's going to be greater work on the consumer duty. That is going to be a part of an application going forward. What is the customer journey there? Diversity and inclusivity is also now a high part of applications. And as I said earlier, resilience, both financial and technological resilience. Financial crime controls are also going to have a higher focus on authorizations, as is ESG, the whole ESG. So we talk about D&I there, there's also others. The digital markets, I've already talked about that. They have a specialist team who are looking at that. The FCA has joined the Digital Regulatory Cooperation Forum so that they get a better understanding of how these things operate. And if we look down, they're also talking about reduction in sludge. So we've talked about how you become authorized. We've talked about what the new focus will be going forward. One of the areas they do focus on in their plan is sludge. And sludge for them is excessive friction that hinders consumers from making informed decisions, or it says by taking advantage, but it's also or taking advantage. And one of the areas they talk about here is about the ability to change products or change providers. And there is a feeling within the FCA, and I'm sure they have data behind this, that says it's still too difficult for an individual, whether it's a consumer or a firm, to change product or provider. Right, Ben, next please. Now this is, I hope you've picked up by now that there's a theme going through here about data and data measurement. And that theme is throughout the strategy document and the plan, they disclose an awful lot of data and the sort of data that they're using. And what they're effectively saying to us is that they are good at obtaining data now, and they have lots of sources of that data, and they're much better at using it. And the message they're sort of giving us is, you can't hide. And if we look at where that data is coming from, one of the key pieces there is reg data. That's their new reporting tool. And guess what? Behind that reporting tool, they have a huge amount of analytical tools available now, which they didn't have under Connect. So they have already increased the ability to analyze the information that they're getting from firms. And that will help, because what they'll be able to do, that will help them, I'm afraid. What they're able to do now is to collate that information and analyze it. And from that analysis, they're going to be able to identify firms that are outliers. And if you're an outlier, then they're going to wonder why. They're going to want to know why your complaints metrics or your claims metrics aren't as good as other firms. And they'll be coming to ask you, because they now have more people, they now have more supervisors, and those supervisors are authorized to do that question, make those questions, ask those questions. So there, and I'll actually come back to something else on that in a moment, but so that's one area that they're getting information, right? That's just the simple bit about the information that they're getting on firms from firms. They have a greater ability to analyze it. But they're also now talking about the ability to take information from the Internet of Things. They're going to be using social media. They're going to be doing some web scraping. And you know what? I mean, it's quite easy. If you Google things like, insurance complaints blogs or things like that, then it's quite easy to find information about a firm which has lots of complaints from people that haven't been dealt with. And that's the sort of thing that we're going to find the FCA is using going forward, because they have now the team and the people and the specialists on doing that. And they are telling us that they are going to do it, and they are going to use that information. And as we've seen on the AR side, they use it to good advantage to change the rules, to improve the way that firms are acting. They also have, so in addition to the internet, they also are now partnering much more closely with FOS, with the FSCS, with the PRA, also the National Crime Centre. And there's a whole range of partners that they identify that they're working more closely with, all of whom have information about products or about activities of firms in the market or about specific firms. So they are collating all of this information. They are using it. It's data to them. And I think this is a really significant change. We've seen bits of it in the past, but what they're now saying is that they are coordinating this much more. And for me, the dynamic here is that it's changed from a position where the firm is the focus. You as a firm, are you doing the right thing? You're still going to be a focus if you're an outlier, right? If you file information on reg data which shows you are an outlier, then that will be picked up. But now what they're doing is they're looking much more holistically, and they're starting from the point of view of the customer. They're using the internet, they're using social media, they're looking at what people are saying on the web about the outcomes that they are receiving. And given that that's where they want to be, I think the shift here is from looking at the industry to looking at the outcomes from what the industry is doing. And it's no longer going to be, is the right outcome being achieved? Or sorry, it is going to be now, is the right outcome being achieved, not is the firm doing the right thing? Because it might be that the outcome is no longer from the firm, but is actually from a wider set, a wider group within the industry. And the consequence, I think, of this could be that there's going to be a bigger impact. If there is an issue, we're going to see a much wider impact because they're looking at this from a bigger picture point of view. So we're going to see more things like, hopefully not again, the BI case, but that's the way they're going. I think they're going to be aiming for bigger pictures. And some of that, I think, comes from the fact that they still don't have enough people to regulate closely the smaller firms. So they have to find a way that they can capture the activity of those smaller firms in the way that they have with appointed representatives. And I think the way that they're doing that is by looking to find out whether or not customers are getting the right outcomes. And if they're not, working out how big an issue that is and how much of the market is engaged in it. But they will also, as I said, be looking at that question of, who are outliers when they file their returns and their RMRs. Okay, and I think one of the other things that I wanted to mention here, and I mentioned it slightly earlier, is about vulnerable customers. Because what the Financial Lives Survey has identified for the FCA was that in October 2020, according to the data that they had, over 50% of consumers were showing signs of being vulnerable. Now, this is not obviously disability vulnerable or age vulnerable. This is financially vulnerable. And so what we're getting now is that they're looking at these issues in a way that perhaps we mightn't have expected. But they are looking vulnerable to them as vulnerable, full stop. And what is that vulnerability? It could be age, it could be financial. It could be that they don't have access to the internet. That's vulnerable. That's all about that question of access to financial services. How do they fix that? And these are the ways that they're going to look. Importantly, what the FCA have said is that they have set baseline metrics. So they've already decided what they think are baseline metrics, mostly from reg data, but there are other metrics that they are working on, and they are going to be using those to assess firms. They haven't told us what they are. They haven't set them out in any detail. And the issue with that, the biggest issue about that, is that that means that firms are going to be at a disadvantage. And why are firms going to be at a disadvantage? Because they don't know what the FCA knows. They don't know whether or not they are an outlier necessarily. And there you're caught by that lack of understanding, lack of knowledge, and what that means for directors and boards and senior management function holders is that they're really going to have to work very hard to make sure that they are able to evidence that the decisions that lead to a particular activity demonstrate that that decision was made in favour of the consumer or the customer. So this approach on outcomes drives away. They say they're driving away from principles, but I don't think they actually are. I mean, all of the rules still exist. Your PRIN, your CISC, your PROD rules, they're not changing those. They're going to still use those. But what they're saying is that you have to show that you are complying with these, and that the outcome of the way that you operate your business model results in the right outcomes. And that's a cultural change for firms. A lot of firms have said that what they'd really like are prescriptive rules. Could we just have a set of rules? We can just go tick, tick, tick. That's great. Thank you. That's not what these guys are doing. They've moved from principles. Those principles are still sitting there, but they're now moving to outcomes, and their approach is to find out what the outcome is. How they then come back to saying, well, this outcome is not right, this is the principle, is what you will see from the data and the MI that they receive. Okay, that's it. Could we now have the final poll? Hopefully we won't have the problem that we had last time. Julia, could you put it up, please?
Yeah, I think I have got a problem with that, Kenneth, I'm afraid. Bear with me. Yeah, that's okay. I'll go ahead and launch that.
Okay. So do you feel more or less positive about the regulatory governance regime following publication of the strategy and plan? That's interesting. We've got about 25% of people. We'll give it another 15 seconds. Okay, let's go, Julia. Let's put the share results, please. So I find that fascinating. I'm interested by the concept that there is almost 25% of people who are more positive. I myself, I think, would probably have sat around the same. I think the issue for me around this is the question of how people are going to get, how firms are going to get a feel for, you know, what is the right thing to do. And it's going to be such a, you know, it brings much more into play that question of a firm's culture. So all of the work that the FCA has done over the last year or two on culture, or even a bit longer, is going to have to be a greater influence in the way that things are done in firms, because the FCA has more information about outcomes than firms are going to have. But okay, so let's get rid of those results, please. Right. Okay, so in conclusion, the FCA is giving more leeway with the outcomes-based approach. They're not changing the principles. Those principles are there, but they are saying that they're leaving it up to you to make sure that you achieve the right outcomes. And that, I think, does, you know, bring in that question of what directors and boards and senior management function holders do. Most importantly, certainly when we come to the last bullet point there, most importantly, it's about making sure that when decisions are made about products and about the culture of the firm and the way it approaches customers, those decisions are documented well, because if you're in a space where the FCA isn't happy with your activity, then you may have got the decision wrong. But if everything that you did leading up to that decision and the approach and your culture was right, then, and it's documented, then that will be significant mitigation for you. So you're getting more choice. However, the standards are increasing, not only on entry, as we saw, but also for regulated firms. You know, D&I, resilience, technology, ESG, they're the areas that they're talking about changing. And of course, appointed representatives is already underway. Faster and tougher enforcement action and more of it. Why? Partly because we haven't seen over the last, I don't know, 5-10 years even, the speed of action that the FCA would like. And that's because it takes so long for regulatory proceedings to be brought. It takes so long for those to conclude. So it could be 2 or 3 years after something has happened before there is any regulatory fine or discipline. And we still don't know what's going to happen, for example, arising out of COVID and BI claims. And we won't probably find out about that for years to come. So what the FCA wants is to be able to show that they mean business and they want to take action quicker, and they want to, they're going to want to evidence that. But they also want you to understand that that's happening and that you will see it. Because if you see it, then, you know, they hope that you will pay more heed to it. I think the delay in that regulatory action is causing some problems. Firms think, well, you know, nothing really ever happens in our space. Actually, in quite some of it is happening. FCA collection and use of data, that's the area I think that's most interesting out of all of this. It's the area where they're going to be more proactive. It's the area where they've said that they are going to be doing more. They are improving their tools. They've already got reg data up and running. They've got the analytical tools behind it. They're using them. And I think that, you know, that is, that's probably the biggest evidence of their intent here. They want to be proactive, they want to be more faster action, and the use of data is going to get them there. I think there remains ambiguity around the question of whether or not firms, whether or not the regime is going to be more competitive. I'm not sure how you increase the standards and still allow greater competitiveness, but we'll see. And I really do hope that that the outcome of the work in the House of Lords does lead to greater competition in the commercial space. And it's all around proportionality. We're just going to have to see where that plays out and how it plays out. And finally, there's that question, as I said, about this final bullet point about how you look at the way you're doing what you're doing at the moment, how you document and evidence that the decisions are the right decisions. Because I think even now we see examples of where firms, the board, the product governance group, they're receiving TCS MI, they're receiving conduct risk statistics, claims, complaints, etc. Are they really looking at them the way they need to be looking at them? Are they saying, are these achieving the right outcomes? And I think that's that's where the FCA is going to be coming from. They're going to start from what's out there to tell us what the outcomes are. Then they're going to look at the firms. And I think that means the firms need to be ready to be able to evidence that they believe that they've taken the right decisions and evidence the information that they use to make those decisions. Right, we need to go on to the next slide, please, because we are coming to a close. We need to remind you of the learning objectives, and they are there. I hope that everyone, or at least I have achieved some of that. I hope everyone has got some of that. Can we move on to the next slide, please? Right, questions. Who's giving me the questions?
Okay, so I can do that, Kenneth. I have got a question for you.
Okay.
So have the FCA been any more specific about what investigations they are going to be doing into algorithms? For many companies, algorithmically based trading has been the norm for many years.
So the answer is no. What they've said is that they now have a team of specialists. I think the issue here is that they want to make sure what they're going to be looking at, they have said, is to make sure that the algorithms in use are resulting in the right outcomes. So guess what? That's not a lot of information. And everybody has different algorithms. So there are different algorithms for, how you deal with claims. There are different algorithms for underwriting. For, underwriting one product, the algorithms are going to be different to underwriting another product. What they want to know is that the operation of those algorithms don't reduce access for vulnerable people, does support identification of vulnerable people who are then given assistance if required, doesn't exclude people who shouldn't be excluded from the market, doesn't result in differential pricing, for example, which is inappropriate and not in line with D&I requirements or other things. And so all of the stuff that we've talked about will be relative to how the algorithms work. And what they are telling us is they now have a team of specialists who are going to be able to look at these and check that they are working the way they should be. Okay.
Thank you for that.
Any more
Kenny.
questions?
We've actually run out of time. So what I would say is no, you're bang on time actually, but we've run out of time for more questions. But if any of our delegates do have questions, Kenneth, I'm sure you'll be happy to answer them post events. You're very kind to us like that. So it just really leaves for me to say, Kenneth, thank you so much for your time today. We really do appreciate your insights into all things FCA. Very thorough webinar presentation. I think there's a distinct indication, as you say, that they are looking so much more at outcomes, but it will be interesting to see how this unfolds over the coming months. But thank you again for your time. To our delegates, thank you so much for joining us today. We are going to be sending out a feedback survey post-event, so please do complete the survey. It will take you no more than 3 minutes, but your feedback is very valuable to us. So Kenneth, ICSR, thank you very much indeed. To our members, thank you, and I hope you have a pleasant afternoon. Thank you.
Have a great afternoon, everyone.